This episode is brought to you by TradeZero and Lupton Capital.
Joe Lupton is a paid marketing partner of TradeZero and may receive compensation for introducing customers to TradeZero. This video represents only the views and opinions of Joe Lupton. TradeZero does not endorse the content of this video.
Hey, everybody. Welcome back to the Investing with the Whales podcast. I am very excited today for my guest, John Fieldly, who is the CEO of Celsius. As many of you know, Celsius is my biggest position, has been for the better part of the last 2 or 3 years. I continue to be bullish because the company continues to execute very, very well. So, John, welcome to the show.
Glad to be here. Thanks for having us.
We're both drinking a Celsius. You can't really see mine because of the virtual background, but I'm drinking a mango passion fruit. Looks like John has a peach vibe.
Oh yeah, peach vibe.
Is that your favorite flavor?
I like all the flavors are really good. Peach vibe's great in the morning. I got the traditional orange flavor is our number one flavor. That flavor's lights out. And behind me, the strawberry lemonade. It's got to be one of the most refreshing, beverages or flavors we've come out with, especially most recently during the summer. So
I literally just picked up a case of strawberry lemonade this morning from my package room. So as many people know, I do drink a lot of Celsius. I think I'm up to 3 or 4 a day, but I don't drink coffee anymore. This is like my only caffeine fix, and I work out twice a day. So I do appreciate the caffeine. Ironically, someone got worried because they saw Costco was discounting, some product, I don't know, 3 or 4 months ago. And I said, don't worry about it. They're probably just blowing out inventory so they can bring in new flavors, new product. And that's exactly what happened. On that screen behind you, it just showed the Vibe 3-pack, which is the tropical vibe, the peach vibe, and the Arctic vibe. So is that like the new kind of go-to for the Costco and some of the big box stores? Have they switched over from some of the original flavors to the new vibe flavors?
yeah, we're doing some high-low promotional activation within the club channel to get incremental shelf space to get off that aisle into that end cap to gain more trial and awareness. And it worked. I mean, the success of it, and you mentioned the Vibe pack, which comes in 3 great flavors. It's now an 18-pack. That's now in the club channel. So you have our core pack and the 18-pack. So we didn't replace one pack for the other pack. That was actually incremental. So the strategy worked. And right now, over the last several weeks, we've been doing some promotions in the club channel, and it's working really well. The flavor profiles are great. The packaging looks great. And it's going to be incremental for us.
Now, those vibe flavors typically come out in the summertime. So should we see another vibe flavor probably going into the summer of 2023?
Yeah, absolutely. We're looking at a couple of vibes next year. We got some really good concepts. The vibe line has really opened us up. We're working on bifurcating the line. So we'll have our core line that we're going to really driving to get that incremental shelf space. And then we're learning more about the consumer on the vibe line. We think it's going after more of a traditional energy drink consumer, especially as we gain more distribution with the Pepsi partnership into more traditional, convenience store shelf space where traditional energy drinks are sold. So we're learning more about it, but we're really bifurcating the line. So you have our core line, we'll have our vibe line. It offers our sales team members more product to sell and really to, grab that shelf space, which is so important to get that billboard effect.
So there's a lot I want to talk about in the next 20 or 25 minutes. You guys had a phenomenal Q3, lots of great news. Obviously, Q3 earnings beat expectations, blew out my wildest expectations. I was a little nervous that you guys were going to run into some hiccups between, while you transferred over or switched over to Pepsi. Clearly that didn't happen with the numbers that you guys put up. So, first off, you've been the CEO for Celsius for how long now?
Yeah, since 2000, really, I did a dual role. So since 2017, so going on 5 years.
And what did the company look like back then? A lot of what we know about Celsius now with the store counts and the Pepsi distribution deal, none of that existed 4 or 5 years ago, right?
Yeah, no, none of that did. We were really focusing on grocery channel and the fitness channel at that point in time in 2017, really we're going direct to retail and leveraging the wholesaler network. We were in 7-Eleven, so we're really nurturing that relationship back then as well. We had some big wins with 7-Eleven in 2017 and 18, where we gained more distribution on a national level. But the company has totally transformed over since 2017 when I took over the role as CFO. And if you go back, I've been with the company since 2012. So been a long time. When I started, we were getting kicked out of every retailer in the country. So it's really a turnaround business here from where we're at today. It's just exciting. The brand is resonating with such a broad consumer base, and the product's great.
So during the pandemic, when the fitness channel sort of shut down, right? Gyms were closed and that, you guys lost some revenues because of that. you turned your focus to Amazon, correct?
Yeah, I mean, we changed everything really. I'm big on task force. It was a scary time. I have a lot of team members, especially on the sales team sides that are, direct to retail, territory managers. We have team members on key accounts and our marketing field teams as well. So we repositioned a lot of our team members. We created a variety of different task force. One was project pickup, trying to engage with our retailers who have gained access to their websites, to their digital platforms. So we did a lot on Amazon, a lot of digital pickups, Instacart, GoPuff, those type of omni-channel platforms. That really helped us out, I think, changing the position. I had sales team members that didn't deal with any digital buyers, really focusing and trying to find the digital buyers in these retailers. And that has totally changed. As a great example is, you go to Instacart. We were one of the first sponsors of the beverage aisle in Instacart. We were working on that prior to the pandemic. And I remember that March of 2000, when the pandemic hit, we already had the aisle covered as the official sponsor of the beverage aisle. And, so timing is a lot. We worked with them very closely. We do extremely well on Instacart today. And it's another great opportunity.
But you also do great on Amazon. You guys are now #2 on Amazon, nipping on the heels of Monster, correct?
Yeah, that is correct. We've been, #3, #2 for some time now. If you go back the last several years, we've been, that's what gets us excited that this brand resonates with a really broad consumer. And we have a major opportunity now that we've really optimized our supply chain with Pepsi and distribution, to see how high is here, because we are #2, and that's really a level playing field when you think about it. It's when you look at a retailer having that cold availability and that same shelf space that some of the leading brands have, given Celsius the same opportunity, we validated on Amazon, we can turn at the same level, if not better.
So people have asked me, do I think Celsius will ever build their own kind of DTC store, on Shopify or some other platform, where you're more connected one-on-one to the consumer? But the problem is, the logistics and the warehousing that you'd have to replicate versus just working with Amazon is expensive and difficult. I can place an order on Amazon for a case of Celsius and sometimes get it same day, or next day. It's hard to replicate that.
Yeah, our model, and we really, when I started, we were doing that. We had a direct-to-consumer model, and we were shipping. If you can't beat them, you got to join them and figure out how to really optimize the business so it works for everyone. It's an omni-channel world. Consumers, when they want it, how they want it. Like partnering with Amazon, partnering with Target, Walmart, everyone has their own pickup systems. So I think our strategy is to really work with our partners, and our partners are our retailers who already have that consumer base, right? So if they're going to come to our own website, you got to trust the website. There's a lot of other challenges you have, is that, security, credit card data capture, potential further cybersecurity issues. There's a lot involved on doing it on your own that you got to think about, plus the warehouse management and all the infrastructure that comes with that.
So let's talk about the biggest news in Q3, which was the Pepsi distribution deal. So they're not only your primary distributor. I don't know if you guys use the word global distributor yet, because you're not really global with them. But they also took a 8.5% position, preferred stock, for $550 million investment, and they got a board seat. And the guy that joined the board from Pepsi looks like he has a ton of experience in international growth and strategy in Russia, Asia, Australia, Europe. So talk to us about that entire deal, how it started, when it started, why you guys closed the deal with Pepsi, and then what it means going forward.
Yeah, listen, to be qualified by PepsiCo is a major achievement for the company, and major opportunity for us as we're looking forward. Jim Lee is our board of directors who joined us, just a really well-respected and has a ton of international experience, as you mentioned, is going to be a great asset to the organization. And then when you look at, how this really came about, it was probably the end of June, early July. It came through pretty quickly. They actually reached out to us, and we were able to put, the opportunity on hand, the distribution agreement, as you mentioned, 550 investment and preferred. It's about an 8% ownership in the business, and that was important to us to make sure our distribution partner has skin in the game. I think that, and plus it gives us the additional capital, working capital and flexibility, and then opens us up, for the, as you mentioned, international. They are our preferred global partner, not exclusive, but preferred, and it opens us up to 125 markets they're in currently. It's going to be a methodical approach on expansion. We have massive opportunity right now in North America. That's where we see the biggest immediate growth and immediate opportunity, and that's what we're working on. You saw in Q3, you were concerned about the transition there, as we all were, and we've been preparing really since the day we were discussing the transition to try to make this as smooth as possible, because transitions never go well. Right. So we've been extremely focused, still focused today, right now. I had meetings this morning on that, really keeping a close eye on the transition to make sure we can do everything we can to continue the momentum as we're gaining more distribution around the country. So it's exciting. There's a lot of opportunity. It's going to be timing and sequencing. Some of the more near-term markets we've been looking at and talking about for some time, which is UK and Germany. Australia is a big opportunity as well. They have really good relationships there. And so we're talking with those, and we'll see where those go. And, we'll make sure we have a more of a methodical approach. It's very risky going into new markets as well. And we feel we have a strategic, methodical approach on entering markets and new territories. But there's a lot of work in the US to do. There's a lot of people that don't even know about Celsius today, and low household penetration. We got a lot of work ahead of us, and we're excited. We're adding people each and every day. The brand's got great momentum now and a great partner.
So you said North America, obviously that includes Canada and Mexico. Do you think we'll see a launch in Canada and Mexico in 2023?
Probably not in 2023, maybe early 2024. I think could be an opportunity there as we look forward. Maybe sooner, based on things. There's some regulatory components that might take a little bit more time. We're doing some focus groups and studies now to make sure we really understand the consumer and have the proper strategy, timing and sequencing. But North America is a massive opportunity. It's right next door. I think Canada is a great opportunity for us, and the product aligns really well with their consumers, and as well as global consumers, with the global health and wellness trends continuing to gain further steam and being part of a daily lifestyle.
So during the pandemic, we saw a hit to gross margins, primarily because you guys had to go out and overpay for can costs so that you didn't risk running out of cans. Are you guys pretty much done with those more expensive cans, and we should start to see gross margins tick back up?
Yeah, I think you start to saw that a little bit in Q3 as we discussed and has been talking about it really the last several quarters. We made a strategic decision to buy those international cans, and Monday morning quarterbacking. You look back, I'd play that same hand again. I think it was really important to have that inventory. There was a lot of competitors out there that were wrapping cans. I mean, if you see a wrap can on shelf, it brings tears to your eyes in regards to how much those things cost, to be honest with you. There is no money being made on wrap cans. And so the international was a challenge. It totally, we had a lot of key learnings on importing cans and the craziness that came along with that and storing cans, but we were able to fill demand. I think that also helped us out, gaining a lot of new consumers. We were able to fill shelf space, take advantage of out of stocks that other companies had. And that helped us out, especially through the Anheuser-Busch network, was able to really keep product on shelf. So I think it was a win-win. I think we gained a lot more consumers by making that strategy. Yes, it was an impact on margins, but we moved the business forward, light years. So we are going through in Q3, we cycled through the majority of our international cans. We do have some remaining that we'll be cycling through on a few flavors, but it's going to be generally immaterial to margins on a go-forward basis. And we anticipate being somewhere in the mid-40 range on gross profits by the end of the year is kind of what we're looking at as we move into 2023 here. So I think we're in good shape. Obviously, there's a lot of pressure, inflation, logistics, can pricing, aluminum, alloys. There's a lot of other input costs. We're gaining more efficiencies with the PepsiCo system as well. So we're trying to produce our product closer to our warehouses, closer to our volume, which will put less miles on cases. So although we have inflationary pressure, we're also gaining leverage with scale, which is helping us, maintain some cost structure as well. So
you just answered my next question, which was going to be, besides help with distribution, what else does Pepsi bring to this relationship? And I assume it's with manufacturing, with logistics, in terms of sales and marketing. So Pepsi has something like 500 or 600,000 coolers in the US. And then there's like 50 or 75,000 energy coolers, right?
Yeah.
So, because they have Rockstar, they have a couple other brands, but you guys will go into, I assume, all of those energy coolers, and then eventually get into the 500,000 or 600,000 stores.
Well, yeah, I mean, that timing and sequencing through there, they do have massive availability. I think, immediately when you look at Bang coming out of their system, that's going to be replaced with Celsius and those energy coolers. So I think there's about 50 to 60,000 out there. So that's somewhat immediate that will gain access to cold placements. Then you're looking at about 100 to 150,000 independents. So Pepsi has a program called the Metals Program for independent owners, where actually Pepsi acts as a category captain and manages the cooler space. So it's really, just think about it as like a convenience store, like a 7-Eleven or a Circle K. It's a planogrammed set that is Pepsi manages for these independents. And about 100, 150,000 out there in the US. So we will be planogrammed in those independent coolers. So that's another great benefit as well, going into those that distribution, which we didn't have prior. Also, food service is a massive opportunity. You mentioned, some of the coolers that are out there. In addition to the coolers is vending, at work locations, with everyone getting back into, a lot of companies going back to the office. Food service could be a big opportunity. I know Ramon talked about that in prior meetings about, he thinks food service is a massive opportunity for Celsius. And we're kind of seeing that as well. And we saw this over the last really several years as people are consuming Celsius. Our main usage occasion was a pre-workout, but now we're seeing it also with lunch, afternoon pickup. So, and we're noticing, according to the numerator data we got, that at 52% of our sales is coming from increased consumption. So that's our core consumers drinking more Celsius because of its availability. So I think hands down, Ramon could be right here at the end of the day, that food service could be a massive opportunity. We're starting to enter in some universities, college universities, massive, and also some sporting arenas we're testing out currently.
So you brought up Bang, so I'll go off of that. So Bang was number 3, you guys were number 4, and then Bang got into some legal trouble with Monster. They lost some court battles. The CEO is sort of a loose cannon, and Pepsi dissolved that relationship or terminated that relationship. And I have no idea what's going to happen to Bang, because they lost their distributor, and they're going to have a hard time rebuilding their DSD network because they've already pissed off every other distributor. So Celsius is now number 3 in the country, correct?
Yeah, that was the last data we had for the 1 week data pull. 1 week is not a trend, but just full transparency. But the latest data that we had and released on the earnings call, we were the number 3 energy drink, and it's it's amazing accomplishment to be at this point. We're far from number 2. I mean, the next hurdle, when you look at where number 2, which would be Monster, they're sitting at 27% share approximately.
And you guys are where? You're like 5 now, 5.3?
Yeah, like I think it was 4.7 share was the last data there. So I mean, it's amazing. But then you're sitting at number 3. There's a lot of other brands coming after you quickly. So it's a very uneasy number 3 position to be in, and we got a lot of work ahead of us.
Well, when I first bought my Celsius shares back in 2020, I think your market share back then was like 1.2%. So you guys have come a long way in the last 2.5 years.
We have. It's exciting, and it's really having the product more available has really helped us out. And you go back to 2020, that was right when we were in trying to activate a national distribution network, was fragmented through Anheuser-Busch, mainly their independents. And that was at the point in time we started to get leverage DSD more and more each and every day.
So, I mean, I look at a lot of what the analysts are saying about Celsius and their estimates for the next few years. And I think we're going to see numbers continue to increase as this Pepsi relationship evolves. Do you think we'll see, because you guys are working at Pepsi now and some of the efficiencies with manufacturing and procurement, do you think net income margins have a chance to be higher in a few years than if you hadn't started this relationship with Pepsi?
Yeah, I think so. Just full transparency right now in regards to like co-packing and production, we're managing that. I think there's opportunities in the future to potentially collaborate there, but we're probably, several years away from that potentially. Really focused on distribution, even maybe leveraging some of their supplier contracts. We're not in any discussions with that. I think that comes later on down the road. They get great pricing. So how can we leverage some of their existing contracts? It does, because it allows you to drive scale through the system, and it's all about scale. We're shipping heavy liquid around the country, which is extremely difficult to do. So by having our co-packing strategically located by the customer, by the distributor, you're going to gain a lot more efficiencies. And that's really what we're working on. So I think there is opportunities. Right now, we're really investing ahead of revenue. I know we're putting up really good numbers and we're doing it profitably versus many other companies that have similar growth rates are doing it invertly on income and EBITDA, but we're driving profitable growth, and that's what we're focused on. I think there's additional opportunities there. We're building out sales teams, finance teams, operations teams, and really adding resources as we scale. And then you're going to gain some additional efficiencies and leverage as revenues continue to grow. So I think there's definitely margin and leverage in the system that will be unlocked in the future.
How is hiring right now? Is it easier or harder to find talent than it was a year or two ago?
I would say it's easier now than 2 to 3 years ago. It was the brand is especially with Pepsi getting qualified. We're able to get a lot more talent on the team that we couldn't attract before. So I think everyone is really becoming believers in the brand, seeing the results, having the number 3 position with the growth that we're putting up. The analysts, reassuring, potential employees about it. We can provide analyst reports, and people see and read, hear what you're saying about the company as well. And there's,
well, thank you for proving me right. I mean, I got bullish a couple of years ago, and I've stayed bullish. And you guys, by far and away, have been the best performing stock in my portfolio. You're kind of holding my portfolio together right now, as many other growth stocks have not done so well. So, I mean, you continue to execute really, really well. I mean, you continue to surpass everyone's expectations. So Costco has been a very, very successful partnership for you guys. And I know recently you also brought on BJ's and Sam's Club. Are they off to the same successful start that Costco was?
Yeah, I mean, it's funny because we were getting discontinued out of Costco when I started, and it was about 65% of our revenue, which was kind of scary at the time. So very cautious on entering Costco. And that's, if you were tracking us, that's why we went on a regional basis. We started to test regions before we went national. They rolled us out national. It's been going great. I mean, it's amazing the volume that's going through there. Sam's Club is going to be a great partnership, as well as BJ's. I think, the club business is great. It continues to grow, especially, where we're potentially headed into a recession, as everyone's talking about. You're going to get a lot more consumers looking for value purchases as well. So traffic should maybe potentially increase there, which will give us additional availability and more consumers opportunities to purchase. So that channel has really grown exponentially. And, it's a little bit larger than you look at, we're told that Monster's overall revenue in the US, about 10-11% is the club channel. So we're a little bit over indexed on the club channel currently when you look at our total mix, but that should change hopefully with the distribution. As we see really Pepsi's distribution further expand, we gain more broader distribution and continue to drive more sales through retail. So hopefully that should balance out there.
So I keep telling people, and you don't have to answer this question, this might be rhetorical, but I keep telling people that I think Celsius is a somewhat recession-proof stock, because I think caffeine is one of the last things that you cut out of your spending. Maybe you don't go out to eat to the restaurant, maybe you don't go out to the movies. I just don't think you're going to cut back on your Celsius.
Yeah. I mean, I agree. I mean, going through the pandemic as well, I thought we were going to lose sales. We didn't with some of the strategies we put in. I figured if folks were at home, there's an opportunity they would move to maybe coffees or teas or some other alternatives. And that's not the case. I mean, we've really built a loyal consumer. Celsius is part of a daily lifestyle, a daily routine. And I agree with you 100%. I think we're probably not the first product you're going to cut off your list. You might change the restaurant you go out to dinner at. You might not order, that extra glass of a cocktail or wine at dinner, or maybe, not have a dessert. I think there's other ways you're going to be cutting back before you cut your Celsius out of your.
You can go into Costco and buy the 15 pack or the 18 pack for less than $1.50 a can, or you can go into Starbucks and pay, $6 for your latte. I mean, I think we know which one you're cutting out. Last couple of questions, and then I'll let you get back to your day. The $550 million from the Pepsi deal investment, where do you think you might spend that money over the next couple of years? Are you guys looking at potential acquisition targets?
Yeah, I mean, opportunities, right? Being opportunistic. Right now, we want to focus on the core portfolio. We think there's a ton of value to unlock with our core portfolio. If opportunities present themselves, we're going to take a look at them. But I think there's a tremendous amount of value in core Celsius to unlock that. Right now, you're looking at earmarking some funds. We're buying fleet vehicles for our sales team members so we can get better execution in trade. And also we're looking at coolers. We're buying a lot of coolers around to really, there's silent salespeople, those coolers. We know we can get the ROI from it. So those are some investments there. We're going to be investing in inventory. And then there's probably some opportunities along the way to vertically integrate too, if we can extract some additional leverage and margin out of the supply chain. So, right now, and it's great, especially heading into where we're at, having additional working capital on the balance sheet at this time. So I think the company is in a really good spot. Not looking to raise any capital anytime soon right now. So I think it gives us flexibility. And in this environment, as we're looking ahead, I think flexibility is key.
So when you say core portfolio, you mean more likely to stick with energy drinks and then expand to new flavors in the original cans, maybe new flavors in the bigger cans, the heat cans. I know I've heard chatter that you guys might do a lower caffeine version, which might even be required for Canada. I mean, do you guys think we'll get a light version at some point with like 100 milligrams of caffeine, or maybe even a caffeine-free can?
Yeah, I mean, we do have that now over in Asia. If you look at Malaysia, the product there has a lower caffeine content in the product. So it's something we talk about internally. We have a great innovation team that's cross-functional. We're looking at a variety of different adjacent categories. I think the big opportunity as well, we look forward is, looking at our partners' portfolio and where's the white space or gaps within their portfolio that potentially we could come out with innovative products to fill those gaps in the future with function, clinically proven function, additional attributes. So I think that's the opportunity we have on a go-forward basis, is looking at our partners, maybe, their portfolio gaps and how potentially we could fill those with innovative brands and line extensions.
So the last question, and I have to ask this or my viewers would be mad at me. When Pepsi approached you guys in June, did they approach you with hopes of acquiring Celsius? And then you guys kind of settled on an investment?
Yeah, I mean, originally there was more of a distribution opportunity that they came with us at that we worked through, and we landed on the investment side of within the transaction there. But there's opportunities within the structure that we have that they can buy additional stock out in the open market up to a certain threshold, and otherwise they have to come to the table. And speak with us, so they can't do a hostile takeover or anything like that. So there's
I was wondering if they could buy in the open market. What can they take their stake up to? Is it 9.9?
I think it's about 15% they can take their stake up to, and out in the open market, and then they'll have to come to the company and conduct a negotiation. And we'll do what's best for the shareholders. We're working for the shareholders here, and our goal is to drive shareholder value and take this brand as far as we can.
I mean, even though as a shareholder, an acquisition probably means a nice pop in the stock price, part of me wants you guys to stay independent for the next few years, because I think the stock is going much, much higher. So, but thank you so much, John. Really appreciate it. Always great to chat with you. Keep executing well. Kudos to you and the team. Just phenomenal execution. And obviously the Pepsi is a big win. So excited to see what you guys do in 2023.
Excellent. Thanks for having us. Cheers.
Got it. Take care. Bye.
Please subscribe to Jonah Lupton's different investment services. The first one is Substack. The URL is substack.luptoncapital.com. The second one is StockTwits. The URL is stocktwits.luptoncapital.com. And the third one is for Seeking Alpha. The URL is seekingalpha.luptoncapital.com. And you can see all of those links if you just go to the Lupton Capital website at luptoncapital.com.